Well, I think that very clearly the Fed is driving all of this. We've been speaking about this for quite some time, but the carelessness of the Fed to really portray a market and an underlying economy in the U.S. that doesn't exist is very damaging. That's then had iterations of it, which we've seen the PBOC having to counteract Fed policy, the PBOC trying to counteract a strong dollar that's really just being talked up by the Fed. And the spillover effect of that's been, pretty dramatic.
Okay, so if we just clarify, Brett, so the Fed painted themselves into a corner. This was a policy miscalculation. They embarked on the first rate hike when the U.S. economy was not ready, yes?
Yes, clearly. I don't know if it was a miscalculation. We actually think that that in order to prove quantitative easing has worked, the only way you do so from an economic point of view is find inflation and raise rates. So I don't know what maybe miscalculation. I think that this was with forethought, which is even more shocking to the credibility of what's going on. And as we know, credibility is very important in the sentiment of the market. So if you don't have a credible source guiding and the hand that's guiding the market is actually trying to play some other game, then all of the ancillary movements that come from there and the counteraction between those really are not addressing the real goal, that there's an underlying weak economy.
Let's drill down on that theme in a bit more detail. You say equity investors no longer believe in the consumer plus tech story that dominated equities in 2015. Why?
Well, I think we've had this kind of acronym-driven market, which went from brick to bat, and now we're at FANG. I've not created any of these, honestly, or obviously, but I think it shows exactly what's going on in the U.S. FANG is now Facebook, Amazon, Netflix, and Google, 4 companies that are not exposed to China at all. And those are the ones that are leading the market down in the U.S. So this tech plus story in the U.S. is actually falling apart, and we have the stock price movement in the U.S. is actually showing that. They're the leaders of the movement down in the U.S. That's not China-driven. So I think we have this decoupling that we saw from a currency perspective. The PBOC has coupled away from a peg to the dollar to a basket of currencies, which we think is very positive. Now I think the markets will diverge as well. And the U.S. economy, U.S. market will show this weakness and continue to drift lower, while we think that the Chinese markets will decouple from this and rally from here.